Alright everyone, Cowboy Trades here, welcome back to the channel. I just wanted to give you a quick update on the Fed's most recent commentary. We talked about this in yesterday's video, how we were waiting for Jerome Powell to come out. However, he didn't make any comments on monetary policy in today's speech. However, we do have new commentary from both Fed Daily, Fed Bostic, and also the World Bank that I do want to talk to you about quickly. So let's start off on yesterday's commentary from both Fed Daily and Fed Bostic. We'll start off with the comments from Fed Daily. Now, Fed Daily, she said that core service inflation hasn't come down yet as the Fed would like to see. Core services, excluding housing, has shown no sense of coming down. Now, you can see down below in the comment section, some people are misunderstanding this, and they're looking at, month-over-month changes and year-over-year changes, which are starting to come down, but the Fed are talking about the core CPI index, not on an annualized month-over-month basis, year-over-year basis. They're looking at the pure index, and as you can see, the core CPI index is actually still pushing up to new all-time highs, indicative that, once again, food, clothing, shelter, fuel, transportation costs, you can read, the basket of goods that are encompassed in this are still pushing up as inflation is roaring through the core CPI. She then continued to say that 25 and 50 basis points are both on the table for the next FOMC meeting, and then said, I estimate that unemployment is to rise to 4.5 or 4.6%. Now, quite recently, we actually had economic data, we talked about this in the most recent video, where we saw unemployment fall. So if unemployment actually pushes up to 4.5 or 4.6%, this is once again going to be extremely bearish for the economy. Output will lower, economic growth will slow, S&P 500 will break down, everything will be looking pretty dire at that point. And the final commentary from Fed Daily, she wrapped up by saying that changing the inflation target is not an option. And if you didn't know, their inflation target is down here at 2%. We're currently at 7.1% for headline inflation, which would be indicative that headline inflation needs to drop by 71.8% before they're satisfied. And once again, we know what they're looking at. They're looking at core CPI at this moment in time. This is what Fed Daily literally just said. And this is still at all-time highs, so it seems we've got a way to go before we do finally curb stomp inflation. Now we've got commentary from Fed's Bostic, which happened at the same time as Fed Daily speech. Now, Fed Bostic, he said that it is fair to assume that the Fed is willing to overshoot their targets. This is in correlation to saying, hey, we would rather overshoot and see the inflation rate drop beneath 2% rather than, undershoot this at 2.5%. And this is also probably in correlation to the United States interest rate. So right now, I believe their terminal rate, which they're looking to hit for inflation, is between round about 5.5 and 5%. There's some disagreement with some Fed members, which is why I'm not giving an exact target. Some say 5%, some say 5.5, some want to push it up to 6. But Fed's Bostic, he is saying that, we would rather overshoot the interest rate target and we would rather undershoot and get beneath that 2% inflation rate. He then continued to say, eventually I want to get to 25 basis point increases, though the timing will depend on the economic data that will be coming out. So, of course, they're still looking at 50 basis point increases for the next month. He then continued to say, as a base case, I do not see any rate cuts through 2023 and 2024. That is brutal, though confidence bands around that are wide. And his concluding comments were, the data is going to guide the Fed on when to shift towards this 25 basis point increase target. So it seems like, once again, a lot of the Fed officials, they are still considering raising the interest rates, and there is really no pivot in sight whatsoever. Powell didn't even comment on monetary policy. So it looks like the Fed is still looking to increase the interest rates by quite a large amount. Now, like I said, Powell didn't really make any comments about monetary policy. It was kind of underwhelming. He spent a lot of the time talking about climate change and how the Fed doesn't want to, get involved with climate change, and that's not their mandate, that's not their risk. This was the main type of things that Powell was talking about. So I could discuss a few things that he said. I listened to the entire meeting, but I'd be wasting your time. He really didn't say anything of any importance. However, the one thing that is noteworthy is he said that the Fed's tools work and there's nothing wrong with our mandates. Basically meaning, hey, we're happy with continuing raising the interest rates. We don't mind that the economy is slowing. We don't mind the S&P 500 is going down. All of our tools are working. Everything that we're doing by raising the interest rates, lowering inflation, everything is working exactly as we foresee. and they don't mind continuing to raise the interest rates even if the S&P 500 breaks the downside, which is what I've been talking about on the channel for a very, very long time. A lot of people think the Fed's goal, Powell's goal, is to make sure that, you know, the S&P 500 is running. They do absolutely not really care too much about that. They care about unemployment, they care about the strength of the dollar, and they use their monetary policy, they use their fiscal policy, they use their mandates to move around the interest rates. These are their main goals. And once again, how the S&P 500 performs, how your portfolio performs, is not really Powell's concern, which is why, once again, he's saying all of our tools are working, S&P 500 is breaking down, your portfolio is getting weaker and weaker, but we're happy to see inflation coming down, so this is really our only target. Now, like I said, Powell didn't say too much, but we also have some brutal comments from the World Bank to wrap up the video. Now, the World Bank just decreased the global growth prediction for 2023 from 3% down to 1.7%, almost slashed in half. This is the third weakest pace in almost 3 decades. I'm sure most of you haven't even been around for this long, so you really don't know, and of course I don't know. I haven't been around for 3 decades. This is brutal territory for, you know, people in my generation, the generation above. The economy is really slowing in a nasty way right now. Now, the World Bank also said the effects of monetary tightening, slowdowns in the US, the EU, China, and spills over from the Ukraine war have all clouded the outlook for growth. So it seems like when you're looking at Fed policies, when you're looking at Fed commentary, when you're looking at the commentary from the World Bank, it doesn't seem like a pivot is in sight like the markets are hoping. We need to start seeing core CPI start to run down to the downside. We need to see headline inflation, which is not this chart over here. We need to see headline inflation really start to come down. We need to see the interest rates at/around 5.5%. We need to see inflation down at 2%. And until these things start happening, you know, you can kiss any chance of a pivot goodbye. Things need to fall in place. A couple of CPI reports which drop, you know, 1, 2, 3 months worth of drops. We've talked about how the Fed has said this is not enough data for us to finally come in and pivot. So that's really all I've got. I just wanted to give you a quick update on the Fed commentary. As always, if you enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you do want more updates from me while I am away from the market, extra posts, memes, charts, all of that good stuff, be sure to head over to my Twitter at 618_cowboy. All I've got for you today, as always, it's been your boy Cowboy Trades. I'm out. Peace.